What is going on, guys, and welcome back to another very exciting video. In this video, we're going to be talking about PayPal, and PayPal is one of the most recent additions to my portfolio. So what we are going to do in this video is we are going to take a look at all of the fundamentals behind the business. PayPal is a company that has been beaten down over the last couple of years, and what I want to do is I want to look at fundamentally what is going on with PayPal and where's the business at. So if you enjoyed the video, make sure you drop a like down below, and if you want to see more videos like this one, make sure you hit that sub button. Before we jump into all of the fundamentals, let's take a look at PayPal's chart. Here today, they were up 2%, but if we look at the last 6 months, this stock is down over 12%. And if we look at the last year, the stock is down around 8.5%, but the 5-year chart is where things get really insane. When we look at the past 5 years, this company was trading at a value of around $310 at one point towards the end of the pandemic run. However, since then, it has fallen in a massive way. We could see that it is down almost 80%. But what's even crazier is when we look at it compared to 5 years ago, the stock is still down almost 21%. And when we look at PayPal's valuation, it is almost down to levels that we saw similar to Meta just around 6 to 8 months ago. It is currently trading at a forward P ratio of 13.33. And just a year ago, it was trading at almost an 18 forward P ratio. And we can compare that valuation to some of its competitors. Here we have Block, and they are currently trading at a forward P ratio of 38.02, and a year ago they were trading almost at an 81 forward P ratio. And if we want to compare them to something like a MasterCard, we can see that MasterCard is currently trading at a forward P ratio of around 31, and if we look about 10 months ago, they were trading around a 22.5 forward P ratio. And personally, my favorite payment processor is Visa, and if we look at Visa's forward P ratio, they are currently sitting at a 23, but traded all the way down to a 21 back in September of last year. Along with PayPal trading at a very low valuation, we could see that analysts are expecting positive things over the next couple of years. They have an average EPS estimate for 2023 of $4.94, a low estimate of $4.78, a high estimate of $5.06, and then for 2024, they're expecting those numbers to grow in a fairly significant way. We can see that the average EPS estimate is $5.65, we have a low estimate of $5.03, and a high estimate of $6.19. And when we look at the growth year over year that's projected for these EPS numbers, we can see that the average estimate is expected to grow 14.3%, the low estimate is 5.2%, and the high estimate is 22.3% growth. Overall, when you're seeing double-digit EPS growth, that is a very positive thing for the company. And if we look at the earnings estimates for 2023, we could see that the PE ratios come out to a 13.79 for the average estimate of $4.94, 14.25 for the low estimate, and then 13.47 for the high estimate. And if we plug in the 2024 EPS estimates, we could see that for the average estimate, we get a PE ratio of 12.05, for the low estimate, we get a PE ratio of 13.54, and for the high estimate, we get a PE ratio of 11. So when we looked at comparable companies, we saw a conservative PE ratio anywhere from 20 to 25. We obviously saw a lot higher PE ratios for companies like Block, and even MasterCard had PE ratios in the 30s. However, just to be conservative, we are going to use a PE ratio of anywhere from 20 to 25, and we're going to run a ratio based off the current price, the current PE ratio, and the potential forward PE ratio, and that will determine price targets for us. And when we run that ratio, we can see that the price target comes out to anywhere from $98.80 to $123.50, which would be a 45 to 81% move up from the current stock price. When we do the same thing, but with the current P ratio based off the low EPS estimates, we get a price target anywhere from $95.60 to $119.50, which would be a 40 to 75% move up from the current stock price. And when we run the price targets for the high estimate for EPS for this year, we get anywhere from $101.20 to $126.50, which would be a 48 to 85% move up in the stock price. And what's really crazy to think about is when we look at the last time that PayPal has really traded consistently in that range of price targets is back in 2019, where the stock traded anywhere from around $95 all the way up to around $120. However, fundamentally over the last few years, PayPal's business has changed in a massive way. If we look at 2019, we could see that they brought in $17 $15.8 billion in revenue. However, if we jump forward to where we're at now, they are bringing in $28.1 billion in revenue. That is over $10 billion more in revenue per year that they are bringing in. And we're starting to see a similar uptrend from EPS numbers. In 2021, they peaked out around $4.39. However, they fell all the way down to $1.74, but they have rebounded since to $2.36. And if we compare that to 2019, we could see that at the end of 2019, they were bringing in around $2.07 in EPS. And overall, analysts seem to be bullish on the stock as well. The current high price target is $160. We have a median price target of $86 and a low price target of $58. The average comes out to $98.81, and that is well above the current stock price of around $68.10. So personally, PayPal is one of the few positions that I'm actually adding to. When we think about the stock market and where it's gone over the last 6 months, it has gone up in a massive way. A lot of companies like Apple, Microsoft, Google, Meta, they've all gone up in a fairly significant way. And PayPal is one of the few companies that's actually gone down so far this year. So with that, I have been adding and creating a position in PayPal. And I think based off the fundamentals and what we see from revenue and EPS numbers, that PayPal is going to be in a good position going forward. They just need to get through some short-term issues that they're having with the CEO leaving the company and really questions about who the new CEO is going to be and what their vision for PayPal is going to be moving forward. So keep in mind, do not buy a company just because some random guy on YouTube talked about it. Make sure you are doing your own research and looking into companies that meet your risk tolerance as well as your time horizon. So with all of that said, I hope you enjoyed the video. If you did, make sure you drop a like down below. And if you want to see more videos like this one, make sure you hit that sub button. And as always, guys, have a wonderful rest of your day.